Let's bring Kunj Bansal as well in on the conversation. Kunj, surprised that the buyback coming in at this price, and is the stock now priced to perfection given the kind of move that we've seen in just the last 2 years, or for that matter in the last 6 months itself?
Yeah, so yes, I mean the timing of the buyback can obviously be discussed. Probably the reason is more the need of the money at the Tata Sons level that the Tata Group might have to do their own corporate restructuring and other issues that separately we all know about. But nonetheless, who is complaining? I mean, minority shareholders are being treated equally, and they will be the beneficiaries. So it doesn't matter even if they do it at a higher valuation or at the high of the stock price of range of last 1 year, high of the market. So that's one part. Two, of course, when it comes to valuation, and especially more so in Indian market, probably in global market also, as I've always been saying, we can keep discussing the valuations till the cows come home. But over the last 3, 4, or 5 years or so, we haven't reached any judgment. If at all there is any judgment, at least till date, it is that buy quality. Even if you are wrong in timing for some time or temporarily, you won't be proven wrong in the medium term, which certainly not long term. I mean, one doesn't have to wait for long term also. Within 1, 2 years, and it's although unnatural expectation that has resulted into that has got into the minds of equity investors. They shouldn't be getting returns so soon, but unfortunately that has been happening. So coming back for quality, the valuation definition hasn't been there. So it doesn't matter. I mean, at whatever level you buy, as long as you are in the good place. And the same applies the other way around also, that if you have bought bad stocks, even if you have bought them at the lower prices, specifically, let's say the so-called value stock, the so-called public sector stocks, some of these more specifically public sector banks, at whatever level you have bought, you have probably ended up being lower than that. So I don't think valuation is a question here. In fact, just to support my thesis on the valuation, let me give you 1 or 2 more facts. It is well known that the whole industry largely is cash rich. It is well known that if we compare this industry to the other industries, the comparison may not be apple to oranges, but when money keeps flowing in, when there is an equity market which continues to attract liquidity and buying interest, it keeps looking for such justifications and explanation. So let's say FMCG. Now, of course, they have brand power, brand valuation. But if they can trade 50 to 60, why couldn't IT have come from 15 to 25? And I won't be surprised, why can't it go to 30 or 35? In fact, if at all, the other reason for that will be that even the growth expectation might go up from here. With the way we are now seeing the continuous need, continuously increasing for digitization, for the back-end support, for the help from the IT sector, the growth rates are quite likely to go up. And probably that is what is marketing seeing in advance. We analysts will see it when it actually starts to come in. And that's where market has started to re-rate. So I am not at all worried about valuation. I am not at all worried about timing. I think it's a good going, and nobody is complaining.
This market, what's been the tone of activity at your end? What are the purchases and what are the pockets where you booked profits?
Question to me, I couldn't hear properly. Yeah, okay. This is always a difficult one then that Nikunj poses. So how I would probably put investment strategy in the current market is that with markets coming back closer to their highs, although over a 2-month period, if we see that those have remained in a range bound movement of the market, I think I will continue to shed, if at all I had any exposure in let's say the metal stocks, specifically steel stock. They had risen in between, then corrected, probably rising again. So that will be one part. Oil stocks, if I had some exposure, I'll keep shedding them. The so-called value stock, public sector banks and all, if I had, I'll keep shedding them. So those will be on the selling side, because that is something that keeps getting neglected. On the buying side, I would continue to build a balance of momentum and defensive. So in my view, if we go by the outlook that companies like Marico gave yesterday, this quarter is going to be good for FMCG companies. If you want me to specifically name, I think HUL and Nestle, specifically Nestle after its correction, although the valuation always remains a challenge, looks good. In the June quarter, they had supply chain issues on both sides, raw material as well as finished good sides, but That has been taken care in the September quarter, and demand has been equally decent. So we should see results coming out to be good. So that is where I will buy. I will continue to buy banking stocks now with the Supreme Court judgment. If it comes the way the government has given um, kind of an indication that they will be taking over the payment of the interest over interest, then that clarifies a lot about the effect that the whole thing might have had on the banking space. So within that, ICICI Bank on the valuation is something that looks good to me. So that is what I'll do. The third part of the strategy is probably I'll book part profits in auto. Not necessarily that I am negative on that. I would still continue to buy stocks like Hero Motors and Maruti specifically. But if at all I bought them at a lower level, I'll book part profit. But otherwise, I continue to remain positive there.
Are we in for a earning disappointment this season, Kunj? Because this is not July, where nobody was expecting anything and a little bit of positive surprise, the markets fled up. October markets have run up. The data is encouraging. So are we in for a buy on rumor and sell on news kind of an earnings season?
Could be, and I'll be very happy if that happens. See, what I'm thinking and what I'm trying to say is that I'm much more happier if market consolidates for a reasonably decent period of time before taking its next leg upward movement. Imagine a scenario wherein market will keep moving one way up. What will happen to the valuations? What will happen to the index levels and individual stock price levels? Will the fresh money be comfortable coming in at those continuously rising prices? I don't think so. So for more money to keep coming in into the market, I would much rather have a consolidated movement of the market along with some corrections also, and increasing the depth of the market, breadth of the market instead of one way upward movement. So I won't mind if there is a buy on rumor and sell on news if that happens. So that's one part. Having said that, we are saying that we have reached high of the market. Let's keep in mind that for last 2 months, of course, July end is somewhere we had reached the current level of Nifty more or less. I mean, I could be here or there, 11,500 odd or so. And after that, we have had August, we have had September. Today is 6th October. We have been going up and coming down at the recent low of in the end of September, 10,800 Nifty odd. Market was probably down almost 10% from intraday high of 11,700 to intraday low of 10,800. But overall, last 2 months has been market hasn't gone anywhere. So let's not say that let's not think that market has moved up. No, it has not. I don't mind at all. We could be in for a disappointment, although I don't think so. Somewhere or the other, the positive news keep coming in, or rather, market is in such a phase wherein it is taking cognizance more of positive news and less of negative news.
Kunj, lots being said about ITC and a whole host of blogs as well being written. It's really the talk of the town, at least this morning. The 10 blunders, it being called an arrogant company, millions of shareholders suffering because of which. What is your own view on ITC, especially after the annual report came out?
Yes, so one, not necessarily that one has to say something or take a view. The data, the numbers, and those are the facts. They can't be disputed. Opinions can be disputed and discussed, but facts can't be discussed and disputed. So the fact is that the stock has been a massive underperformer. And I am not saying that this today. If you go by the records of our interactions in the past, this has always been my stance that this is one company which hasn't been performing, not likely to perform. So it's better avoided. Now, there are few reasons for that. Of course, all those blogs and 10 blunders and you all said are large part of them are true. But more importantly, my view of an underweight or underperformer or a negative or an avoid comes from the reasons that, as I keep saying, I am not a votary of value investing. Value investing has completely failed in India. And unfortunately, ITC seems to be falling into that. That's one part. The second part is that the stock, besides being a very bad allocator of the company, the management, besides being a very bad allocator of capital, is also dominated by the negative news flow as well as expectations on the taxation side from the government. And I have said this earlier that when GST came in, it was thought that only GST now can have impact on companies like this. But in the last budget, government introduced taxation on cigarette, thereby saying that no, these companies are something which we will continue to control beyond GST also. So imagine how big derating factor that would be on a sector and on a company. So that's there. In fact, not that you have asked me, but let me just add, another stock in Hindi, if you allow me, Naam Bade or Darshan Chote, we can call these kind of stocks. A company called M&M, Mahindra and Mahindra. Now, if you leave aside last 7-8 months or so of its outperformance, driven largely by two factors: one, sharp positive sales growth unexpectedly from the tractors, and the statement by the management finally that no, we will look at improving the return on capital. That's another stock, as I said, if you leave aside last 7-8 months, was a massive underperformer for last 5-6 years or so. As I said, my numbers could be here or there. When the whole auto industry, largely leave aside Tata Motors, but Maruti was doing exceedingly well, two-wheeler companies were doing reasonably well. So these are the kind of companies which, the managements have to look for themselves, have to look for the minority shareholder. Leaving them aside, shareholders have to look for themselves. It's by choice that you are buying these companies. Nobody's forcing you.